So let's take question number 51 to question number 60. और जो क्वेश्चन मैं यहाँ पे कवर कर रहा हूँ फाइनेंशियल मैनेजमेंट के, वो क्वेश्चन एक्चुअली गवर्नमेंट एग्जाम्स में आए हुए क्वेश्चन मैं कवर कर रहा हूँ फ्रॉम डिफरेंट क्वेश्चन पेपर्स विच आई हैव टेकन माई सेल्फ. So question number 51 says that which of the following determines return on capital employed? Option number A, earning before interest and tax divided by capital employed, or earning before tax divided by capital employed, or earning after tax divided by capital, or earning after tax plus depreciation. So generally most of the students ऐसे क्वेश्चंस में what they do is generally they select option number D, but the correct answer will be option number A. Why interest is not deducted? Because interest itself is a return on capital employed, so we do not reduce it. हाँ, अगर यहाँ पे पोस्ट टैक्स पूछा जाएगा तो यहाँ पे इन दैट केस यू व्हाट विल डू इज EBIT multiplied by 1 minus tax rate, so then post tax will be there. But in the question nothing specifically asked about post tax, so answer will be option number A. Question number 52, that quick ratio, what will be the quick ratio? So it is current asset divided by current liabilities, or this adjusted with inventory and prepaid expense, or adjusted only with inventory and quick asset divided by quick liability. So answer will be option number B. So quick asset is also known as asset test ratio. So generally inventory there is a holding period, prepaid expense also you may have paid for say 6 months, 7 months, so they are not that liquid, that's why they are reduced from current assets while knowing your quick assets. So quick asset will be this divided by current liabilities, that will be your quick ratio. So answer will be option number B. Question number 53 is permanent working capital is generally financed through a long-term fund, government assistance, internal financing, or short-term loan from bank. So answer will be long-term capital fund. Why long-term capital fund? Because you know that current asset minus current liability, so that is your net working capital. So working capital current asset or gross current asset, that is being financed through current liabilities, but there is a permanent portion of that also which is not being financed through current liabilities, क्योंकि आपका जो current asset है वो current liability से ज़्यादा है, तो वो ज़्यादा वाला portion है that is being financed through long term fund only, otherwise it cannot be financed, क्योंकि current liability तो आपका current ratio से current asset से कम है. So answer will be option number A. Question number 54 says standard deviation can be used to measure risk on investment, return on investment, profit or loss. So the answer will be risk. Standard deviation has nothing to do with the return, it is only the calculator of risk. So answer will be option number A. Question number 55, cash flow used to determine IRR is very important question. Option is EBIT, B is EBIT minus tax, C is EBIT minus tax plus depreciation, D is earning after tax. So first जो क्वेश्चन 51 था उसमें हमने EBIT किया था only to determine the capital return on capital employed, but यहाँ पे what we generally use is cash flow that is used to determine the IRR. So generally जो हमारे बुक्स में इंस्टीट्यूट ऑफ चार्टर्ड अकाउंटिंग की बुक्स में मॉड्यूल में भी दिया है, तो आंसर विल बी ऑप्शन नंबर C. Generally we will reduce the tax rate and will add up depreciation. So answer will be option number C. But sometimes a free cash flow that can also be used. In that case, what we will do is we will reduce capex from it and we will adjust the working capital. Because your earning before interest and tax, that also include accrual earnings. It is not a cash flow as such. So that is again a debatable issue because we are using the word cash flow here. But this is how in our modules or in theory this is how we calculate it, but in real world generally free cash flows that is used and that is derived when you reduce capex from this and adjust for working capital, then only you will come to know about your cash flows. Question number 56, one more point regarding question number 55, as in what is the difference between cash flow and fund flow, that you can see my separate video with that respect. Question number 56, the proprietary ratio indicates the relationship between proprietary fund and answer will be option number B, total assets. Then comes question number 57. It says DSCR indicates means one is lenders are interested in debt service coverage to judge the firm's ability to pay off current interest and installments. Absolutely correct statement. Option number D is earning available for debt servicing divided by interest plus installment. Correct. Again correct. C is normally from 1.5 to 2 is considered satisfactory. Absolutely correct. So all the given options are correct. Answer will be option number D. In debt service coverage ratio, it's a very important ratio when you judge the lending capacity of the borrower. So lending capacity is not only the principal amount, it also includes the interest, and that too current interest. Current interest means interest and installment which you need to pay within a period of 1 year, because the profit which you are taking, that is also pertaining to a year only. So we'll take the current interest means interest payable during that year, and installment that is getting due in that year, because we are taking the profit of that year itself. So earning available for debt servicing divided by interest, this is the formula for DSCR. Now what is the earning available for debt servicing? It's simple, that net profit after tax, then you will add non-cash expense like depreciation, amortization, then again you will add back interest and other adjustment like loss on sale of fixed asset, because as such that is not a cash expense. And the fund from operations can also be considered as per the requirement, but generally this is the formula from financial statement. From these earnings will calculate the DSCR, and but if lease rental is given, then it will be added in both numerator as well as denominator to consider to derive the DSCR. Question number 58. Which of the following is the type of efficiency ratio? Efficiency ratio is also known as turnover ratio. So the given option C, which uses the word turnover, will be the correct answer. Debt to equity ratio is more of solvency ratio. Earning per is profitability. Net profit is also profitability ratio. Option number C will be the correct answer. Question number 59. What does debt to equity ratio helps to study? The answer is option number A. We just studied about it. There are mainly 4 types of ratios, and solvency means how much the firm is leveraged, whether it has over leveraged itself, means using more debt as compared to equity, then it may be a bad situation from the firm when there is a pro-cyclical effect in the economy. क्योंकि generally debt जो cheaper source of fund है, so it doesn't mean that you over leverage, क्योंकि वहाँ एक fixed payment रहता है, which may not be the case with equity. Question number 60. Which of the following is the balance sheet ratio? So the balance sheet ratio means which can be derived from the balance sheet figure itself. So net profit, no, it's a P&L ratio. Current ratio, yes, because current assets and liability both are present in the balance sheet. Debtor turnover ratio, debtor is there in the balance sheet, but turnover is from P&L, so it's not an absolute balance sheet ratio. Likewise, DSCR is also not, because an interest and installment that you may know from the balance sheet, but your profitability is only from this. So the answer will be option number B in the game. I'll come with the next series. These are the questions which are actually asked in the examination, so you may pay attention if you are preparing for government exams related to the field of finance, accounts, be it a CA or MBA, whosoever is preparing for these exams. It will be very helpful. Hope this helps.